points on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 20th, 2022, and I'm getting tired of this. The stock market went down again. We've only had 3 green days of the year, but today was the most volatile of all of them. It was overall a 2% move top to bottom. If anything, it's one for the history books. You rarely see moves like this. Again, we opened up 1% on good earnings, and well, it's bringing up a lot of panic here. We're going to talk about it, but we closed down throughout the day. I'm telling you, hours at a time. We probably had 1 hour of cool off during philo, and then it just all went crazy. But now we have broken below the 100-day moving average, and where the market is today, it is very important, especially as we get into some earnings. So we got a lot to talk about. I'm going to go over everything that happened, the plays that we made. I got one put play that I know is at least cheap now. We made it. We're going to go over it, and then all the plays for tomorrow. But overall, this is a very big correction that you've seen. We are down 10% of the highs. I encourage you to bring that stamina back and stay in the game. It is tiring, but hopefully by the end of this week and the end of next week, we should get a lot more clarity, or you may get a Powell pivot, so it may even turn out good. We'll see what's going to happen, but I got all of that stuff for you guys. Make sure you drop your thumbs up on the video if you find it helpful. Make sure you stay in the game and stay focused, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We are going to be there live, and during volatility, you're not going to want to miss it, my friend. But right off the bat, as far as today, like I said, it was the most volatile day of the year, but the surprising part, and it kind of explains some of the moves that we got today, this was after getting good earnings. We got 2 banks, Bank of America, Morgan Stanley. It actually ended up being good earnings and guidance. Even Procter & Gamble, which is very inflation sensitive, more or less, they actually did good despite price hikes and even their guidance and all of that. So you had the good earnings, and that's what got us up in the morning, but it was not able to hold, and you really saw a weird effect today. So we talked about this today, and there's a couple things you need to notice. It's one, how we opened, but then what was going on in the morning. It had to do with the industries. Essentially, some of the bank stocks kept going down despite some of the good earnings, but what we saw in the morning is that the safe havens, the financials, and even energy, they were down in the morning while tech was actually leading the way. Again, tech is the one that was getting clobbered, and even in the morning, we were up with about 10 out of 11 industries were all in the green, and then we flipped to this where only 2 ended up closing green. But the big thing you saw about most of the day, pretty much until close, this last hour was absolutely wicked, but for the most part, it was a lot better than yesterday. Pretty much the good earnings, it gave some light to individual names, but it allowed tech to bounce, and then it was all of the names that were leading during all of the fear. That's what came down, but then as none of the momentum stuck, it turned out with every single thing getting clobbered and hitting a new low. And like we talked about, this top to bottom move is a huge sign of volatility. You saw it a couple of weeks ago back in December, but it doesn't really happen too often, and this is really showing you the sentiment. The momentum just isn't sticking, and that's why moving forward from here, we are at a very crucial point, because if these earnings are not able to get us up and get us back alive here, then, well, we're going to need a Powell pivot, and it could get pretty crazy. But with that in mind, I hate to say it, but sadly, even though there's been losses left and right, I've been getting clapped. A lot of people have. I mean, it's crazy to watch some of these moves, but sadly, this is not the moment to panic. It is pretty much going to be after next week, because if nothing changes from what we're getting today, where we start getting good earnings and these companies start selling off, you get these really quick pops that don't really last, and you're not able to get investor sentiment kind of back up there, and people are really worried about the unknown or the plan of the Fed. That is when you see the real flush, because at that point, we talked about it today, that's when you cannot save the big tech stocks. A lot of people are saying, wait, a lot of stocks are already down a lot, and that's true in a weird way. That's both good and bad, but the real big issue, it's Amazon, Facebook, Netflix, Google, all of these, even Tesla, don't forget about Tesla, but all of these companies are still holding pretty big levels. There's been a lot of pain, but a big portion of the market and big investors, hedge funds, and people who've been here for a while, they felt the pain, but it's not as bad until some of those really start to go down, and that is where we kind of get the crack. So I showed you that one chart yesterday. The next chart we got to look at, it's not as telling about earnings, but this is showing you what is going on with the macro scale, and we got a lot of different things happening, but this is showing you negative yielding debt and what has happened pretty much over the last month or so. It's been cut more than half, and this is showing you yields across the globe are surging. Germany used to have negative rates, not anymore. The UK, they've been going back up with some stuff, even Japan. So what this is telling you is that volatility and expectations, inflation worries, all of that, you are hitting a breaking point, and you have not experienced anything like this pretty much throughout 2021. If you look back when the year started and we had that first bond move last year, it didn't cause this type of move. Again, there is now less than $10 trillion of negative yielding debt. When we started this year, it was almost near 20 trillion. So keep that one in mind. But the point is, watch the bonds, and we've been getting a back and forth. But until some of these macro factors change, if the earnings do not change people's mind, this is where we start seeing a lot of domino effects and reverberation. So keep your eye out for that. But as far as tomorrow, Netflix earnings is really going to be in focus. And what I'm going to be looking at is the positioning at close. You want to see, do people dump it in that last 5 minutes or do they buy it up? We're going to be watching that for our pre-earnings plays. But essentially, how Netflix does, it will probably create an initial move on some of the tech stocks. It usually does that depending on the market, but sometimes it's short-lived. But here in this environment, I think it is going to be key. So that is really going to be the big focus and what people are going to be watching. And one thing that I brought up today, and this is kind of what to keep in mind. I mean, today just felt like a really long day. I said if you cut the chart like right here on the day, it kind of looks like 2 full days. Essentially, you would spend a full SPY trading day up here, then we drop down and then kind of go up. And then this is kind of like the after hours close, and then this is like the new day. Pretty much, I'm kind of expecting tomorrow to trade a little bit like this, where I'm circling, and essentially, as long as there's no bad data or more liquidation and freaking out, you may see some level of stability at this 450 mark, which is very, very key. And then coming into earnings, it makes the final move, and depending how Netflix does, that will probably put the dagger there as we set up towards the end of the week, and then a lot of uncertainty into the weekend if it does go red, 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 red. So keep your eye out for that. But as far as everything else, oil has been going up. It's dislocated from the market. You saw gold come alive today out of nowhere. Market correlation is near highs. Everything is just moving down or up in the same thing, not really reacting to catalysts. And now the December rate hike odds are dropping. So pretty much like I'm saying, if we break any lower from here, and if the earnings get better but people aren't responding to it, that is when things really start to change, and then you should be getting new narratives. But ultimately, with the December rate hikes already dropping, since we've already sold off so much, if this volatility does continue, the market may start pricing in a Powell pivot, and Powell saying, yeah, we can't do this. Yeah, we got to slow it down, calm down, please. But coming into the company news and events now, you got a couple of things. This one, after hours, it's going to affect a lot of travel plays tomorrow, and you're going to get more airline earnings. But United Airlines has lowered their full year 2022 guidance to lower than 2019 capacity or revenue. I think they lowered it by 20%, and they said it's because of Omicron and that they're going to be limiting capacity. So we'll see what happens with that. But they had a big move after hours. Watch that. And then we heard from Biden in, I think, his 11th speech, or his official speech since he became president here. But a lot of people were waiting for it. He did say he approves what the Fed is doing. I almost thought he was about to add pressure on the Fed, and that would have been the dagger. But he did talk about Russia and Ukraine. This has been very, very important. And now he said he expects Russia to move in on Ukraine, and he even gave Putin another warning. So keep this in mind, because now a lot of people are expecting it. You're seeing things happen. Everybody's asking about the effect. It may be somewhat priced in from now, but keep your eye out for this. I wouldn't react too soon. And if we do get developments, I don't think we'll be too late to react either. So watch out for that. Then Bitcoin King Michael Saylor, he said that MSTR is never going to sell its stash, and that it is a great entry point for institutions right here. So Bitcoin is down about 40% 9%, I think, since the year or something crazy like that. So we'll see what happens with that. And then you got the 5G news. They've gone back and forth, but the FAA has cleared 62% of the United States airline fleets to operate within airports near the 5G towers. So Verizon and AT&T, they said they're going to slow down. I guess this is some level of update. I mean, I would just factor this into the airline earnings and what we got after hours, but keep an eye out for that. And then finally, Instagram. We saw this move Facebook throughout the day. It was kind of a delayed reaction, but then the volatility took over. But keep your eye out for this. They said that they are piloting a program to offer subscribers. So I think like paid subscription and even like YouTube subscribers. They said they're trying to compete with YouTube in a way. So pretty interesting. But if it can make them money, that's good. But the stock did drop when people heard the news that I think they wouldn't make any money on it till at least the end of 2023. So that's pretty much it. But today, very straightforward. Surprisingly, even the news was kind of soft here, but now a lot of people are looking at what's going on the markets. If anything, technicals are getting a lot more importance. There's just so many things from macro to technical going on right now. A lot of emotions are high, and really, we want to see if earnings is going to save us, and if it doesn't, well, we better pray for that Powell put, so I hope you're ready, but that is pretty much it. So let us get into the plays. So, right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow. I made plays on all 3 of them. I did buy the dip. I made a crazy Amazon call. We're going to talk about that, but we got to talk about the puts right now. And this is why I've been showing you guys a lot of the option premiums. And this is why if you're watching on stream, it is very difficult to buy the right protection right now because the last couple of days kept the premiums up. So even at the morning when we were up 1%, you could have got a put on the SPY, Apple, Microsoft. You could have got them at 50% lower than where they were at the day before, but they're still up about 50 to 100% from a couple of days prior. So it puts you in that weird 50-50 scenario where it's saying, okay, you could buy it at a cheaper price on one of the bounces, but then if you do get a sustained bounce, I mean, you are going to get double clapped on it. Remember, you're buying insurance and people buy insurance for a reason. You got to watch your premium and break even. So that is the problem here. But this is why I like the first play, Boeing. I'm going to show you the option chain and what I did. And if anything, you guys did very, very well on stream today. You were calling out the leaders on the market. We were saying to pay attention to which one's going down. If you see any options like this, I mean, call it out indefinitely. This is what you're going to want to see, but we need puts that are actually down in value. So if we're about to break any of these points, again, we have calls. You could still very well bounce, but what I'm trying to say here, the real panic moment, if things can't be saved by earnings, if Powell does not pivot, anything like that, everything is going to go down. So some of these leaders, their put plays are actually cheaper. So now that's why I made the Boeing one. The bad part about this is that they've held up as kind of a defensive name, could benefit off of that negative UAL news. So that's what puts it in the middle. But as far as the play, and you'll see now everything I've been saying on the chart, I grabbed a Boeing 175. I grabbed 10 of them at like 53 cents. We bought them middle of the day. I think 53 was like, was it right here? I think. I guess it was fairly early. It did end up dropping, and you can see, and this is the risk if you do it, because like I'm saying, if the market chills out, you buy into that premium, even on a play like this, you could still get clapped. But by the end of the day, it only made 20%, and I'm really not happy with that. If you think about it, that was a wild flush on the market. So if the market goes against you, you're going to pay for it, but then if it does start to go down, you'll make money. But we're talking 20%, whereas a couple days ago, they were going up a lot. But this is what I'm trying to show you on the contract. At the very least, I am not buying some of these contracts that are really, really high in the air or are still having a premium. Essentially, anything could happen, and that's one thing I'll tell you now. Even when we talk about the Amazon play I did, right now at this key level, if the market stops responding to certain things and you see even the dislocations and correlations, everyone's flying in the dark right now. So just be prepared. You're stepping into unknown. I'm ready for it, baby. I'm down with it. But just keep that in mind. And that's why when you're seeing all this, even if it does get too confusing, maybe you got clapped a little bit early, do not be afraid to take it slow. Pull things back. Let it wait a little bit. You don't need to hit it perfectly, and you don't need to really chase the bottom there. I mean, you could let the moment come to you. So don't forget about that. But if we look at some other plays here, I'll show you like an Apple put. We'll go to February. You could go near the money, further out the money. It really does not matter, and you'll see what I'm talking about. But even today, if you come on the daily or the one-day chart, like Apple this morning, they opened up at 22 cents. These contracts were at 40. That's literally a 50% drop in the morning. You see what I'm saying? So it's like this morning, 1% gap up. If you wanted to buy the Apple put for protection, you're getting a 50% discount, and then it eventually went up. If you bottom ticket, you're great. If you held it from yesterday, you only made about 10 or 15%. But then look at it over the last couple days, that 32 cents, that bottom is still about another 50% higher from where it was at pretty much before the start of the week. And then again, these contracts are all decaying pretty quickly. So this is what I'm saying with the puts. That's why I like the Boeing. If we go back to it, you just see it's a different type of chart, especially if we're getting it at the low. So that is what I am looking for. If you see these, call them out. But this was the first play. We're going to be riding this one out. We'll see what's going to happen. So keep watch for that. Coming into this second play, I took the risk again. Post earnings play, I'm just going to do it. I don't really even care what's happening in the market because earnings will sometimes avoid it. And even then, Morgan Stanley did hold up today. It did do good, but with the volatility in the morning, I ended up overpaying. I grabbed a weekly option for next week on Morgan Stanley. I grabbed the 105 calls, but my idea with this one is just play the post earnings move. If they do come back, it could be good. And Morgan Stanley was a leader. So even despite what's going on, I'm still keeping my eyes out on the winners, and I'm not afraid to get calls on them. But that's going to be the second play I'm going to watch tomorrow because you want to see if the bank streak keeps going down. Otherwise, some of these good earnings, if we could get them to all turn around as an industry, that could offer a lot of support. Otherwise, if they sell off, it could get pretty ugly. And then finally, baby, Amazon. I bought the dip and I'm looking for the flip. So usually most days after these big moving average breaks, when you get a flush like this, and I will say this, I've been saying this a lot, after enough down days, you're going to get one of these up days. So at the very least, after today's move, I'm expecting a lot of volatility. I made sure I got a little bit more of time, but remember, we flipped out the first Amazon calls that first time and got lucky, thank God, but a lot of those contracts dropped substantially in price. I think it might be time to take advantage of a flip. At the very least, we are going to get volatility, and the last 2 days, Amazon just really hasn't gave into the sell-off as hard as some of the other peers, but they were one of the laggers today. So when Microsoft, Google, Facebook were all up, Apple and Amazon were the ones that were lagging. So as far as the play, I decided to grab March. A lot of the earnings plays, I was there on February, except for that one Microsoft, but I grabbed a 3,500 call and I spent $3,700. So a little bit expensive, looking for a bigger flip. But why I want to show you the option chart here again, we brought this up that first time. We was around this first drop when it kind of cratered. We held for a day or two and then made that other flip. It did end up coming down, so thankfully we sold off. But all in all, I'm buying the low end of the chart, and this is what I'm looking for. At the very least, like I'm saying, everybody is flying dark. At the very least, what I want to make sure is in my advantage is I'm getting the puts that are cheaper and have the potential to move. The idea here is, depending on what happens with Netflix, we should get a move, but by next week, we'll see where the market's at. You still have earnings, and now in this case, I got a little bit more time, but it is a lot further out of the money. I was debating going for one a little bit closer with less time, but I said, let me get a little more time, and then we'll go from there. But those were the main plays. As far as everything else, I took profit on those June Walmarts. I was getting a little bit worried. They held up 18% throughout all this, so I took those profits, and then I also had those Intel shorter-term Januaries that came back to life, sold those, got 30%, and then this was the other post-earnings play. And one thing you're noticing this morning on Morgan Stanley and UNH, I got clapped doing the post-earnings. Now, granted, you saw what happened with the market. Usually they could hold up. Even in UNH's case, the stock ended up staying green, I'm pretty sure, but I got filled awful, and then after that volatility, it was down 70%. So try to keep it a little bit smaller. I'm down 130 on it. I mean, if anything, I only spent 180, but what I'm going to be doing is eyeing this one tomorrow. This is definitely one I'm going to be watching, but I'm not going to go for the same one. I'm going to look for closer to the money to play it, and that is if healthcare holds up. But those were the main plays. As far as everything else, I'm going to be watching for tomorrow. May want to make a weekly flip on this. Again, down 7%, 8%, but this is the thing I like and I don't like because I want to take advantage of the move, but you got to remember the thing that Ford had going for it was a lot of strength, so watch out for that. Otherwise, if we do see more risk off, I would not hesitate to even look at these for the puts possibly. It could be an opportunity. volatility, so watch out for that. Then United Steel Materials added a lot of pressure. You would think they would be good, but they got clapped here today. Watch Materials. I'm going to be watching them. Netflix, again, post-earnings or pre-earnings tomorrow. Just watch out. I think it's going to be a wild one, but if it does make a big move in the morning, it may not do much. It really depends on what we get, but pay attention to the positioning at close. And then Boeing, Amazon, Microsoft, UAL, going to be watching that one in the morning. FXY, still have this play, but I've been noticing not only the fluctuations, it's at a key level, but the premium is jumping between down 50% and down 20%, but essentially we're getting volatility. So keep your eye out for any of these currency plays. These might be the ones that slip through. You could look at the currency ETFs or even now some of these countries. I'm just expecting we might get some moves here, so watch out for that. Caterpillar, I still have that put play from the first time we shorted the defensive ones. If you remember, those plays are down 18%, but still going to be riding this one out. I want to watch here. If you get a day two of defensive selling off, it's going to be an interesting one, and that's what I'm looking for if we get any sort of crack. Procter & Gamble, this was a good one. We should have got this one on the post earnings, but don't hesitate for it tomorrow. If the prices aren't too crazy or if they show really good strength, this one could definitely be active. UNH, like we said, Roblo are plays. I didn't think they got clapped that much, but I just checked. They're down 60 or 55%, but this morning I was even up on them like 30 or 40%, but that's just the Roblo morning move and volatility. So still riding that out. I'm still liking them. I mean, I think they held up a little bit better today, but they are at that key earnings level, so we'll see how they play from here, but watch out for them. And then AMD, there was chip news related to like sanctions on Russia. You kind of saw some activity, but a lot of the other chip makers came down. Qualcomm broke a key level. AMD is breaking a key level. Even AMAT. There's a lot of these different moves, so watch out if those give. Remember, besides the last earnings that saved them, they were kind of struggling a little bit, so we're going to see what happens with them. And then finally, TLT and the dollar, it chilled out today. A big portion of the calmness in the morning was TLT chilling out, but in the weird way today, if you notice, I mean, dollar did go down, but the market followed. So if that correlation kind of starts to pick up, you could kind of see it a little bit, but not really. Essentially, you just do not want this SPY in the dollar to really match up too well. Otherwise, that's where we're going to get some problem as people start to expect a lower dollar, but keep your eye out for that one. TLT, I mean, watch the premiums here. I mean, some people are saying calls. If anything, I'm still thinking puts, but just like any of the other play, all of the put plays are offering that same proposition. It's really 50-50, so we need more earnings. We need to see what the market does, but pay attention. There might be a secret that may slip through earnings, and it will either be the all clear or the warning, so I wouldn't be surprised if we got an advanced jump on any big move, but we could go anywhere from here, and it is a very historic moment, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to know who you are and where you're going, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.